Most income investors are being quietly robbed, and they don't even realize it. The biggest lie in the ETF world is this: higher yield means higher returns. In reality, many ultra-high yield options ETFs are slowly draining your wealth while calling it income. They pay you back your own money, shrink your capital, and still get marketed as winners. After analyzing the US options ETF space, I found something very rare: 12 funds that generate high income without destroying their net asset value. No hidden liquidation, no structural decay, no yield illusion. Let me show you why that matters. Imagine two investors. Both start with $10,000. Both invest for 5 years. Investor A chases the flashy 45% yield. Sounds amazing until you look deeper. Their fund loses 12% of its NAV every year. 5 years later, their capital drops to about $5,300. Their annual income also drops to around $2,385. Almost half their wealth is gone. Now investor B chooses a boring 22% yield, but their fund grows its NAV by 4% per year. After 5 years, their capital grows to over $12,000. Their annual income rises to about $2,677. So the lower yield fund ends up with more capital, more income, and real compounding. That's the difference between income and liquidation. Before I trust any options ETF, it must pass 5 non-negotiable tests. First, sector conviction. If the underlying sector has no long-term growth, no strategy can save it. Second, NAV integrity. If the structure erodes capital over time, it's disqualified immediately. Third, proven total return. Not just distributions, real, positive total performance. Fourth, realistic yield. Anything consistently above 40% is almost always unsustainable. And fifth, intelligent options design. Out-of-the-money strikes, longer expirations, dynamic management, not reckless weekly calls that cap all upside. Only when all 5 align do you get income without long-term damage. After filtering the entire US market, only 12 ETFs passed every test. They come from providers like YieldMax, Neos, Roundhill, Rex Curve, Tapalpha, Goldman Sachs, X-Funds, and the tickers include Blocks, CHPY, TSB, TDAIC, Envine, Magi, BTCI, QQQI, SPY, KQQQ, GPIQ, GPX. Every one of them shows stable or growing NAV, sustainable distributions options strategies that leave room for upside exposure to strong long-term sectors like tech, crypto, and broad indexes. So why do most high-yield options ETFs fail? Because they chase premium instead of performance. They sell aggressive weekly calls. They cap nearly all upside. They get shares called away during rallies. They distribute more than they truly earn. The result? NAV decay, masked as income. The funds on this list do the opposite. They use out-of-the-money strikes, monthly or quarterly expirations, dynamic strike adjustments, put-based strategies that preserve growth. Instead of capturing 0% of rallies, they capture 60–80%, while still paying income. That's the difference between harvesting premium and sacrificing the future. One more important distinction: market drops are not NAV erosion. If the Nasdaq falls, your ETF falls too. That's normal volatility. Structural decay is different. That's when the strategy itself destroys value, even in bull markets. Over-distribution, constant upside capping, poor option positioning, high fees, and forced turnover. When decay is structural, time works against you. These 12 funds avoid that problem by design. This is not about chasing the biggest yield. It's about maximizing capital preservation, income growth, and long-term compounding. 5 years later, the safe 22% yield beats the insane 45% yield in both wealth and cash flow. Because real income grows, fake income shrinks. So if you're evaluating any options ETF, remember this checklist: stable or rising NAV, sustainable yield under 40%, smart options mechanics, exposure to strong growth sectors, a structure that earns what it pays. When all 5 align, you get what these 12 funds offer: Income that builds wealth instead of bleeding it. Final thought. The options ETF space is filled with yield traps. 50% payouts that turn $10,000 into $5,000. Weekly distributions that are just your own capital coming back. Strategies that sacrifice every rally for short-term premium. Don't fall for it. These 12 US options ETFs prove you can earn high income without sacrificing your future. They passed the test. Your portfolio deserves the same.